Over IRS Form 709, the United States Gift and Generation Skipping Transfer Tax Return. So in this video, we're going to go over the three parts of Form 709. Part one is the general information field regarding the donor. Part two is the tax computation. This will actually, when you're filing your gift tax return, this will probably be pretty close to the last section that you would complete. You would complete most of the other parts and schedules first, because you're bringing in information from those different areas. Literally, there's an amount that you would enter from Schedule A, B, C, and D as applicable. Part three only applies if you and your spouse are splitting gifts. We'll explain that in just a moment. So really quickly, a brief overview of each of the schedules. We have done a complete video on each of those. We'll put links to each of those videos in the show notes. And of course, our comprehensive article contains step-by-step instructions on not only the form itself, but also each of the schedules. So Schedule A is the computation of the taxable gifts. You do need to complete Schedule A, and then there are several parts. There's part one is gifts subject only to gift tax. Part two is direct skips. So these would be subject to generation skipping transfer tax and gift tax. And then in part three, there are indirect skips and other transfers and trust. So these may be currently subject to gift tax, and later on they could be subject to generation skipping transfer tax. So you'll put those here in chronological order so you can keep track of them for future purposes. And then in Schedule A, you total everything up in part four. So we've gone over that in a separate video, and we'll link to it in the show notes. Schedule B is your running list of gifts from prior periods. So it's a summary page basically for prior year gifts, just so that you can keep track against your lifetime exclusions. Schedule C, it applies if you had a deceased spouse and you were able to use the portability election to transfer part or all of that spouse's unused exclusion. The restored exclusion is a very similar exclusion. It applies to a certain period of time for same-sex couples that would not have been eligible for the spousal unused exclusion amount when the law first passed allowing this. There's a couple of years between that and the landmark Supreme Court decision that concluded same-sex marriages were constitutionally the same as different-sex marriages. So the restored exclusion applies to couples that initially were not able to port their spouse's unused exclusion, but then this was a loophole that opened up after the Supreme Court. Most people don't worry about the restored exclusion. You can focus on the spousal unused exclusion. And again, these are for spouses with the date of death after 2010, so 2011 and forward. And then finally, Schedule D is where you compute your generation skipping transfer tax. So all of those are in separate videos. My apologies. We're going to go step by step through all these fields that I had completed prior to this. So in part one, we're going to complete John Doe's information. All right, so it's important as we go through this, we'll see that the IRS wants to make sure that you're maintaining the same address, and if not, you're keeping them up to date from year to year. So we'll get to some of those information fields as applicable. Obviously, if you live overseas, you would enter the foreign country's name in box 9. Item 10 would contain the state or country, and then the postal code. Uh, According to the directions, the legal residence would be the country in which you're, or sorry, the state in this case, in which you're legally residing. So John Doe's address is in Texas. For all intents and purposes, his legal residence or domicile is in Texas. And he's a U.S. citizen. So boxes 14, 15, and 16 are all check boxes. John Doe did not die during the year, but if he did, you would check the box, enter the date of death. If this was an amended gift tax return, you would check this. There's not a separate form like a form 709X. You would just use 709 and then check this box that's an amended return. And then if you filed an extension, you would check this box. On line 17, you would enter the number of donees that you listed on Schedule A. So we're not going to go through those previous examples from those videos. We're just going to start filling in hypothetical information and going over each what each number represents. So let's say that we donated to 5 different entities or people. And again, donations, they could just be gifts. We bought new cars for 5 different people and reported it on this tax return. In line 18A, it asks you if you filed a gift tax return. If you check no here for this is the first gift tax return, then you can skip line 18B. You also will not have to complete Schedule B at the very least, because Schedule B applies to prior tax years. But if you did, we're going to check no here, but if you did say yes, that should indicate to you that you are going to be completing Schedule B. And again, Schedule B is just a running list, so the only change from each return would be entering the information from the immediately preceding tax return. Everything else in Schedule B would pretty much remain the same. So we didn't file previously, so we're going to skip line 18B. If you and your spouse made gifts to third parties, then you would complete part 3. So this is where we start talking about the concept of gift splitting. In 2024, the gift tax exclusion, the annual gift tax exclusion amount was $18,000. For 2025, I think it's $19,000. We're going to use the 2024 numbers. So let's say I had a daughter and I wanted to give her a gift for high school graduation. If I gave her a gift more than $18,000, I not only have to report it, I have to do the tax computation to determine if I owe any taxes. $17,999, I don't even have to report it. But once it goes over $18,000, then I do have to report it. So I would have to compute the tax. But let's say that I bought her a $30,000 present. I could go through all of that, or what we could do is something called gift splitting. And that's where I claim $18,000 of an exclusion, and my wife, who also agrees with this present, claims and reports this on under her $18,000 of exclusion, and all of a sudden it's not a taxable gift. It's still a reportable gift, but it's not. You don't need to do the tax computation because everything will be zeroed out. So if you decide to do gift splitting, or even if you didn't, but you still made gifts, then you would select yes. We'll go over part 3 on page 2 to talk about those questions. Have you applied a deceased spousal unused exclusion amount from a predeceased spouse to a gift or gifts reported on this form or a previous form? So if we did do that, we would have to complete Schedule C. We're going to say that we didn't do that, but Schedule C specifically applies to the deceased spousal unused exclusion, or DSU. And then you do have to check either yes or no for line 21 with regard to digital assets. So did you transfer any Bitcoin or any NFTs if they still exist? Whatever the case may be, it's yes or no, but you cannot leave this blank. The IRS will reject it. When you look in the instructions, that's all it says. It just says you need to not leave this blank. So now we're going to do the tax computation. Again, these numbers are not based on anything actually calculated, but we're going to walk through what each number means. So the amount from Schedule A, this is the total tax computation on all of these gifts. And if you completed Schedule A, you would get down to the bottom, and this part, line 11 right here. I apologize for the fact that this part of the form is in, I guess, landscape, while the rest of it is in portrait view. So let's see. Let's just imagine that this part is $50,000. Schedule B, this is the this would be the prior gifts. So Schedule B, gifts from prior periods, and we would total all of this up and enter that into the line 2 amount. And again, what we're going to do each time we do this is we're going to calculate the entire gift tax liability that was previously captured, the gift tax liability total now, and then subtract the difference. That's so. And the reason why this form forces you to do it this way is because each year has a different exclusion amount, and this type of calculation is easier done when you kind of walk through the calculation in this manner. So we can get a lot more complex in terms of computing the gift tax, but suffice it to say, we would take the entire total amount and then take the amount that has already been previously applied, and then our applicable credits and our applicable taxes would be the difference between them. So since we didn't complete Schedule B, we're going to leave that as 0. And so our total taxable gifts is $50,000. Now we're going to compute the tax on the amount from line 3, and we're going to use this table right here, the table for computing gift tax. So when I was in CFP school, we had to memorize the formula that the gift tax was 40%. Well, there's a graduating scale. The top marginal tax bracket is 40%. Basically, anything over $1 million, 40% of that is the gift tax amount. But we're talking about a gift tax amount of so the amount of the gift was $50,000. We would be calculating $8,200 plus 24% of the $10,000. So that ends up being $2,400 plus $8,200, so $10,600. So we're going to put that amount in here. And then we're going to calculate the tax on the amount on line 2. So if this was, let's say this was $20,000, then we would put a difference in here. We would calculate the difference. And again, we're doing this comparing prior periods to the current period, because when we apply the credits, we're going to have to apply the total credit and then back out the credits that had previously been used. So we're not doing that in this case. Our tax on that is 0, so the total tax is $10,600. The applicable credit amount in this case for 2024, it's $13,610,000 per person. The applicable credit against all prior periods. So let's say that we did all of that and it turned out to be $5 million. You would enter that in there and then subtract that. That would be your remaining credit. We don't need to do that this time. line 10 only applies if you made certain gifts during this little loophole in time in the tax code that occurred between September 8th, 1976 and January 1st, 1977. And so there's a specific exemption for gifts that were made during that time frame. Uh, we didn't make any gifts during that time frame since this is 2024's tax return, and we are telling the IRS that we never made any prior gifts. So the applicable credit on line 12 is the smaller of either the rest of this or the actual tax liability. So the applicable credit happens to be the $10,600. So clearly we'll see that we will not owe taxes. We just need to complete the calculation and then keep this as a running tab for future gifts. If you had a credit for foreign gift taxes that you paid, you would enter that here. We don't, so we won't. The balance would be subtracting this from this, which ironically is 0. And then any generation skipping transfer tax, again, if this was something that we transferred to our granddaughter instead of our daughter, then we would be reporting this amount on both Schedule A and Schedule D. In this case, we don't have anything in Schedule D, so the total tax ends up being 0. If you paid any gift tax prepaid or any GST tax when you filed an extension, then you would enter that amount here. And then you subtract line 18 if from line 17. If line 18 is less than 17, you still owe some tax money. You would report that in line 19. If line 18 was greater than line 17, then you would get a refund and you would put the difference in line 20. And then down here is the signature. You would sign and date it as the donor. If you're using a paid tax return preparer, they can fill this out. And then the IRS is going to ask for permission to discuss this return with the preparer. I'd recommend that you say yes. You don't have to give the IRS permission, but if you don't give them permission, then you'll be the front and center person for all their questions. Part 3, the amount that we consented to gift, right? So if you did consent to have gifts made by you and your spouse, considered to be 1/2 by each of you, this is the concept known as gift splitting. Then in Schedule A and Schedule D is applicable. You would, for a $50,000 gift, for example, each of you would claim $25,000 as a gift. For the $30,000 gift example, instead of one spouse claiming 18 and the other spouse claiming 12, each spouse would claim $15,000, which would still be under that $18,000 limit. So if you say no, then you don't have to do the rest of part 3. But since we did talk about it, we're going to go ahead and put this in. Let's see, let's put John's wife's information. And then if you were married to each other the entire year, check yes or no. And that means you were married before the beginning of the year and your status on 12/31 is still married. So if you weren't married during the entire calendar year, then you'll need to check whether or not you were married, divorced, or married at the end of the year but not at the beginning of the year versus being divorced by the end of the year, or if you were widowed or deceased. And then will your spouse also file a gift tax return? If yes, then you should include both returns in the same envelope. And then do you have your spouse's consent? So have you obtained spousal consent for gifts made to third parties? You would also need to attach a notice of consent. And let's just take a closer look at the instructions, what the spousal consent consists of. So part 3 is all the way up here. And so spousal consent basically is a document that is signed and dated by the consenting spouse and must include a statement that the spouse is electing to treat all gifts as made by one half of each spouse. So if only one spouse has to file a gift tax return, then only one notice of consent is required. It would be attached to your tax return. If both spouses have to file gift tax returns, both spouses have to execute a notice of consent for the other spouse's return. It can be signed anytime after the end of the calendar year, with the exceptions laid out here. So, can't be obtained after April 15th, and it cannot be obtained after a notice of deficiency for the gift tax. So, you can't go back and say, oh, sorry, like no takebacks. I went ahead and, you can't do that after the IRS is claiming that you owe gift tax. You can do that before that, and it has to be between the end of the year and April 15th. So that's all we have for this video. We'll put links in the show notes to there's a playlist that we've created on each of the schedules, as well as other related forms. So the extension form, the electronic signature PIN authorization forms. There are other forms that are directly related to being able to file a gift tax return, either electronically or paper. So we'll put links in the show notes to all the resources we've created about those forms. So if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And as always, if you have any questions or comments, or if there's another topic that you'd like to see covered in an upcoming video, please hit me up in the comments section. Thank you very much and have a great day.